Every map tells two stories, one about geography, the other about gravity. Right now, the pull is shifting, away from Auckland's nerves and Wellington's policy fog and toward the crisp clarity of the south. Retail growth in the South Island is running 4 times higher than in the north. Queenstown is alive, and property markets there are whispering a different truth. The oracle of outlooks, the prophet of policy, Mike Jones, chief economist at BNZ, is back to break down what's coming next. If you like making money rather than watching everyone else do it, hit that subscribe button because the numbers don't lie. More investors are getting the New Zealand housing and real estate intel from this show than any other YouTube channel in 2025. Mike, what's really driving the South Island's outperformance in both retail and property metrics?
Yeah, I mean, not just in the property market, but across the board at the moment. And still, you're seeing this big gap between the north, which is relatively weaker, and the south that still seems to, in parts of it at least, be trucking along. You wouldn't say strong, but stronger than the north. That extends to the property market. I was down in Invercargill recently. They've got the strongest property market in the country. They've had about a 5% lift in house prices. Obviously, they've had something quite different to that in the likes of Wellington and Auckland. So Otago, Canterbury certainly outperformers overall, and including in the property market stakes. I think a lot of that has to do with where people are going. If you look at internal migration patterns, it's still a kind of north to south vibe, and so there's more construction, there's more activity, there's more confidence in some of those markets. I think we'll probably see from here a little bit of that divergence narrowing a little. I think we're seeing in Auckland things start to lift a little bit, and Otago and Christchurch prices have been rising for a wee while already now. So we'll probably see a little bit of a coming together. But at the moment, they're very much one of relative strength in the South Island.
And how central is Queenstown's tourism recovery to this property story right now?
In terms of the Otago story, I mean, tourism flows are certainly helping Queenstown, but also Christchurch and some other regions in the south. Arrivals, we're still seeing tourism arrivals slowly claw their way back to where they were pre-COVID. In fact, in Queenstown, they're now above pre-COVID levels. And the thing, having been down there recently, people are starting to talk about a bit more as, well, do we see some of the tourism that was perhaps destined for the US come down here as well? Because we know that some of those forward bookings for the US have turned down quite noticeably of late. And so, the question is, as a tourism destination, do we see some of those bookings down here? So a good reason to stay optimistic about the tourism sector, I think.
And South Island's growth is predominantly because of the export demand. And is some of this growth future forecasted growth that we haven't got yet?
I think some of it is catch up. I think some of it is a lot of it is population related, and a lot of it in a sort of circular fashion probably just comes back to the property market. Like the property market in the south has been stronger than elsewhere, and we know that in of itself is something that gives people confidence to spend and invest a little more than otherwise, which is obviously not the case in Wellington in particular, but also to some extent Auckland.
And are we seeing employment intentions and expectations differ between north and south, or is this just a property story?
Yeah, generally speaking, both of those things are firming up across the country. Of course, an intention is not necessarily the delivery of a job or a piece of extra kit. And those two indicators you mentioned, I think, are really in focus at the moment because they tend to be decent, if not perfect, forward indicators for what people in businesses actually do. And so the one we're looking really closely at is investment intentions, because we know the intention to invest, or the investment itself, has been something that has been missing, or firms are still worried about the outlook, and worried firms or uncertain firms don't tend to invest. So we'll be watching that actually later in the week just to see if investment intentions have held up, because they did turn down quite noticeably in the ANZ's April survey for the second half of that month. So we know the firms are looking at the offshore picture and thinking and worrying and forecasting on the basis of that. So we'll be keeping a close eye on those indicators.
And looking closer at the coalition budget, what are the impacts in the different regions? Who's going to be the winner and who's going to be the loser with what has been announced?
I think at an overall macro level, there weren't too many surprises in the budget for us and for the Reserve Bank either, in terms of how it sets interest rates. I mean, generally speaking, it's a picture of some pullback in government consumption, an area that has been obviously relatively strong recently, with the onus being thrown over to the private sector to, I guess, take up the growth mantle, along with a bit of help from lower interest rates in the Reserve Bank. So I think that was the overriding message from the budget. And at a macro level, look, there's lots of sort of shuffling below the surface, but that was broadly the picture we got.
And what should smart investors be doing if they want to watch the South-North battle play out? If you're looking for a mix of cash flow and capital gains, you must have your eye on a few cities.
No, I mean, it goes back to watching the numbers, and I think for me, the population numbers are always really interesting. Where the people are going, slightly unfortunate aspect of that is we don't get them particularly regularly. I think we get them out in October, November for the previous year. So it's still very evident, not just in the numbers and the economic stats, but being in those regions that people are feeling less pessimistic down there because people are turning up and investing and shifting there. So that's a big one to watch. And then some of those other indicators that we mentioned about the property market. It's still a very uncertain picture. I think the consensus is picking, a 5% odd lift in prices this year, but that's subject to a whole lot of assumptions that are being tested all the time, given the volatility we're seeing offshore.
And are we expecting any rental yield pressure in certain regions, or is it just pressure in the main cities because migration's dropped off?
Yeah, I mean, we had a look at this recently as well, just to get a sense of where the capacity and where the supply is in the rental market around the regions. And I mean, point one is there is much more supply everywhere. So rental vacancy rates, which is what we tend to look at, have lifted quite noticeably in every single region. But you can definitely say that Auckland and Wellington have experienced, or not only they have the highest overall rental vacancy rate, but they've experienced some of the biggest increases as well. And Wellington, really out in front in that respect. So it speaks of, I guess, if not downward pressure on rents, then certainly not a lot of pressure to rise in the short term, because there's plenty of supply about.
And the retail sales growth in the South Island's been stronger than North Island. People, are spending their money.
Yeah, as we talked about, I mean, it's been a general outperformance across most measures, whether it's retail sales, whether it's employment, whether it's the housing market. It has been relatively broad-based, and there's a sort of a self-sustaining aspect to some of it as well, I think, given, there's more building in those areas where people tend to move, and housing market lifts, that feeds through to spending appetites. And so, yeah, it's all linked. That's right.
Just waiting for South Island to declare independence, and next thing you know, we'll have a second country. Glad to see it's going well for them. Appreciate your insights today, Mike, and suggest everybody check out your latest reports. And been watching the OCR dropping, and hope to see more of it.
Thanks, Andrew. Always a pleasure.
A reminder again, money moves fast, and the investors making the most of it are here. This is the fastest growing property channel in New Zealand for a reason. If you don't subscribe now, just know that someone else is already using this knowledge to make their next deal while you hesitate.